This video explains the micro Nasdaq futures, or MNQ, and Nasdaq futures shared trading router. The goal is not just to show that a backtest made money. The goal is to show what the setups are, where the execution flaws were found and corrected, and how the contract counts were chosen for automation. The router is one shared brain with 7 automation arms. It watches opening range breakout, pullback, initial balance continuation, and fade, pre-market base, pre-market high, retracement midpoint, and retracement runner. Only one sleeve can own the live trade slot, while disabled sleeves still shadow the state so the router does not double fire. Opening range breakout starts with the first 5-minute regular session range. The trade waits for a real breakthrough that range with momentum and VWAP context. Risk is known at entry because the stop comes from the signal structure. If the move works, the stop can move to break even and then trail with a chandelier-style exit. The pullback sleeve does not chase the first breakout. It first requires proof from completed 5-minute bars, Donchian breakout, Bollinger expansion, a large directional body, and volume. Then it waits for a small limit pullback. Stale means the setup had its chance. If the limit order does not fill quickly, the context may no longer be valid, so the pending order is skipped or canceled. Initial balance is the first 1-hour regular session range. Continuation means price cleanly accepts above the range high and keeps going. Fade means price breaks the range low, fails, and quickly reclaims back inside the range. A clean high break would continue, while the failed low break can enter for a move back toward the range high. The pre-market sleeve is a bridge into regular session structure. It looks for a selected long setup before the initial balance is complete. The main criteria are a strong pre-market location, the regular session open near the upper part of the pre-market range, and a 15-minute momentum reading that is not already overextended. If the trade is still open when the initial balance confirms, management can hand off to the range engine. The retracement sleeve starts with a 4-hour anchor candle. That is a large 4-hour candle whose high, low, and midpoint become the reference map. After price reclaims the qualified area, one part exits at the midpoint and the runner tries to reach the far side of the anchor. Once the midpoint pays, the runner can trail instead of leaving the whole trade exposed. Before sizing for a funded account, the router was tested with equal sizing to confirm the edge shape. The selected chain had about 1,882 trades, about $40,600 of modeled net profit, a profit factor near 1.645, and closed drawdown near $1,550. That was positive expectancy, but it was not yet a prop trading size. The audit mattered more than the headline profit and loss. The Pine script build for TradingView helped reveal execution flaws, and those flaws were corrected before trusting the sizing work. Then we checked TradingView desktop parity, tested disabled sleeve shadow behavior, replayed micro Nasdaq tape directly, and audited open equity while trades were live. Uneven sleeves means the strategy parts do not behave the same. They have different trade counts, different win and loss shapes, different drawdowns, and different profit contribution. That is why one static contract size was too blunt. Stronger and cleaner sleeves earned more contracts, while weaker or riskier sleeves stayed smaller. The current all-in-one micro Nasdaq plan uses 9 contracts for opening range, 3 for pullback, 2 for initial balance, 1 for pre-market base, 3 for pre-market high, 2 for retracement midpoint, and 4 for retracement runner. In the recent calendar day replay, 30 days produced about 42.9% payout-ready windows, 13.5% failed windows, and 43.6% alive but not ready. For automation, the cleanest version is a one-shared TradingView strategy that sends the correct quantity with each order. Pick My Trade should receive order fill alerts and use the TradingView placeholder for strategy order contracts. That keeps the router state intact and avoids maintaining separate alert copies with stale settings. The final takeaway is straightforward. The trade families are defined, the Pine script parity work exposed flaws that were fixed, the backtest edge was scaled into micro Nasdaq contract counts, and the all-in-one TradingView script now carries the sleeve quantity for automation. The remaining deployment check is live data, alert delivery, and simulated fills matching the expected order messages.